Cool, recorder's running. About 4 more minutes. We can get started. Three-minute mark. Then we can get started. Thank you very much.
If it's not thick enough, tell me. I'll put more ice in it.
Yeah, that's fine. Thank you.
Okay.
Good. Thank you very much.
That good?
Mm-hmm. All right. All right, 1 more minute and we can get right into it. All right. I'm gonna go ahead and get this started now. Welcome back, everybody. Appreciate you joining another session with us, another class. It's going to be a little bit focused on the psychological part. Again, as I was talking about before, appreciate y'all popping out late night, Tuesday night. Gonna look at some charts, right? Get some analysis in. Hopefully, give you guys some less confusion when looking at these charts. So, it's not going to go based off of order per se on what I have posted, but I wanted to start off. What I mean by this is by starting off with one, the psychological side, trusting ourselves, right, holding positions for longer, and then two, the outlook on the psychology of an emotionally manipulated trader. And I'll show you this with chart examples, right? We'll go through in the minds of an uninformed trader, right? Someone who is blindly entering, blindly exiting in certain positions, right, within these charts, and we can understand, okay, maybe that's why price is reacting this way. It looks like this, right, based off of previous data, and how we cannot be manipulated out of trades, right? How we can look for just objectives, understand. If price does this, then price needs to do this, right? Cause and effect, the overall story from beginning to end, right? To reverse engineer from our higher time frames to our lower time frames, because we understand, right, that our lower time frames are going to make up our higher time frames. So as a trader, right, as I am looking at these charts, right, my goal is to reverse engineer these time frames, right, from the higher time frames to the lower time frames, so I can get that entire narrative, get that entire story, and catch a profitable trade, right? So to start this off with the mind of an emotionally manipulated trader, one, we talked about last session, the difference between what I would consider a retail trader, right, and then the difference between what I would consider a smart money trader. And all that was, right, the biggest takeaway, the basic right, black and white, right or wrong difference that I use to differentiate the two, right, is just going to be setting a plan, knowing where you're exiting and where you're entering, right, based off of logical data, based off of analysis that you have done, right, based off of a plan that you have formed, versus blindly entering and blindly exiting, retail versus smart money, in my opinion, right? So, as an emotionally manipulated trader, we get into a lot of situations, right, where we talk about FOMO and FUD. So FOMO can be any situation where price is in a downtrend, price breaks out, right, and we're looking for price to come back into demand. Price ends up showing some sort of reaccumulation, or what we believe to be reaccumulation, right? We end up longing right here because we don't wait for price to come back down into this area. Price exceeds higher a little bit, mitigates an area of supply, takes out early shorts, right? And then all of a sudden, price moves back down into demand, and your long position, right, is now in drawdown. Even though you felt like you were catching the breakout, right, or catching the bottom in this situation. But we need to understand, right, as smart money traders, that price will travel back to fill inefficiencies that caused a certain impulsive move, right, to fill orders, anything that is unmitigated within that area, to fill these orders and then to move from that. So to avoid this FOMO and this FUD, right, we can use structure, and we can use our objective-based plan to figure out certain areas to look to either bid, right, or certain areas to monitor price action in the future. So those are just two little examples, right, just showing that FOMO and FUD can occur, right, as an emotionally manipulated trader. But to show you this on chart examples, we could get into a situation right here, right, where price is in a downtrend. Here, let me go ahead and use replay mode for this example. Right, we see this accumulation occur right here. This is just a weekly chart, so big candles to show the overall story. We're looking for a behavior, remember. So we see an accumulation start to occur. We see highs that are formed. We see those highs taken out, and we're on the weekly chart at this point, right? So I'm looking for closures at this point in time, not wicks underneath, anything like that. I need a solid closure underneath these lows to look for a possible trade to the downside, right, within this scenario. So at this point in time, we see our volume is starting to rise, right, as we're starting to show some sort of bearish behavior, right, some sort of bearish tendencies. We have longs that are being created right here. So these are late longs that are getting in after this impulsive move right here to the upside. They saw a downtrend, whatever they saw, right, based on however they were playing. If they were playing something like this, right, they longed after price broke out of this range, and we see all the late longs following with their stops underneath these lows. So that's showing us that liquidity is within this area. Now remember, we did break structure to the upside, even though we're looking overall downside from this higher time frame bearish structure, right? Overall looking something like this. Even though we're still looking for that, we still need those confirmations to be able to take those trades. I'm not worried about catching a top or anything like that around this area if my structure isn't shown, right? It doesn't matter to me about catching tops, catching bottoms, what it looks like, anything like that. I'm looking for the behavior to come, so I have an opportunity that is shown to me, so I can make a confirmed trade, right? So we showed the longs that were being showed. Early shorts were taken out. Again, we need a solid break of structure to be able to take this trade to the downside. But within these areas, right, as an emotionally manipulated trader or an uninformed trader, you might get into the scenario where you see what you believe to be a break of structure to the downside right here, right? Get in shorts within an institutional candle or supply zone within this area, and we can actually see how that occurred, right? So we got our first move. And one good rule that I always kind of set for myself when looking to take a trade, this is something that Pips of Persia mentions a lot too, is once you have your zone, I usually look for the manipulation after mitigation of the zone to look for either new demand or supply. Now the manipulation is going to be that liquidity rate, right? Liquidity rate upside or downside to take out the early shorts or the early longs, so then the final move can then occur from that, right? So within this scenario, we see early shorts taken out here, and then we start to see a down move within this scenario, right? You might think this is a break of structure downside, like I was saying earlier. But again, remember this impulsive move, we have demand that was created down within this area using the entire consolidation just to make it simple. Right, we have our demand that was created within this area. We had a reaccumulation occur, so we see our rally-based rally. So we understand that this area is an area of demand. It also broke us out of the range as well. We got candle closures out of this range. So this area is an area of demand. Using the entire consolidation. Again, right, so we're starting to see the story of price action now. Price came up, started to create some highs, right? We saw that one move down. We saw the early shorts that are being created from that. So we have equal highs here. We start to see some type of distribution play out, right? These lows are taken out here. Price comes down, mitigates demand. Price comes back up. We now have early shorts getting in this trade from supply, right, up in this area that caused this move down. So if we were to look at this on a daily chart, right, you see this move down on a daily chart. Remember, your higher time frame bias to your lower time frame bias. So from a weekly now to a daily, we see this move and we see this and we might say, oh, this looks good, right? Big displacement candle to the downside, broke structure to the downside, right? Area of institution entering the market right after liquidity rate upside. That is a lot of confirmation, right, starting to come to us. But we have to remember overall, we need those closures, right, from highs that cause new lows to be able to get in any type of trades to the downside within this scenario. So if we're on a daily chart, we understand this area as an area of supply, right? But once price comes down and mitigates this area of demand, what do we see after, right? Immediately after. So let's bring these bars back real quick. Right, so this is on the daily chart, price is starting to come down. We're starting to see highs that are being formed right here. So this is early shorts that are immediately getting in this trade, thinking that it's going to go to the downside, right? They thought they caught a top on the daily chart, whatever it is. We let price play out. We see those highs taken, right? That liquidity purge. Price starts to move downside even more. Taps into our area of demand. Now remember, we're on a daily chart. So within this area, right, we have an area of redistribution. So if I were to go to the 4-hour, we have an area of accumulation to then distribution. I'll go to the 1-hour. Accumulation to then distribution, right? This area may look like a good long area, right? You may see a liquidity rate to the downside right here. This is where Wyckoff, right, can get confusing because we see our liquidity rate to the downside. We see all of these highs being created. And we see some type of demand that was formed. So we see, right, that move up. We might look at this as a break of structure. We're identifying this area as an area of demand, right, that caused that break of structure. Price comes back into this area, right? We set limits here and then we get destroyed. Well, what happened was, right, price came down, accumulated, and then distributed. So we created demand right here when we impulsed out, right? But then we just had one move that created a lot of imbalance, right? Within this move right here. Again, took out all of these shorts right here. So took out all of these early shorts and then moved to the downside from this break of structure right here. So now that the early longs were taken out, right? Early longs were taken out right here. They short immediately, right? After their longs were taken out or they're stopped out, whatever it is. They short, price comes back up. They're like, oh no, I'm going to get stopped out, right? Or they get stopped out, and then what happens? The liquidity is opened up, right? And then we get that final move to the downside. So knowing that we can confirm, right, our higher time frames to our lower time frames, within this scenario, we would identify this zone as a possible zone of demand, right? I will be wrong. You will be wrong, right? It's all about getting that experience, getting the feel for it, and understanding it when it comes up to the chart, right? And when you can see it live. So price comes up, right? Comes down. We identify this area as a zone of demand. Won't take us back that far, which is okay. Believe we were. Oh, that was annoying. Okay, we're over here. All right, so price came back down. Let's go to the daily. Start this out for you guys. All right, so we understood within this area, we had that accumulation to the distribution, right? So in this area is an area of supply. It caused this new low right here, right? And this low created liquidity and also mitigated demand. So instead of looking at this as, oh, it's just taking out shorts, right? It's going to continue to the downside. I understand, one, if I wanted to short this, I have an area of supply. So one, from this move to this move right here, right? I already want to short within premium. So I'm going to be looking in these areas, right, to short anyway. Now, overall, right, we have that bullish structure that was formed. Demand was created here, rally base rally. Demand was created right here, that reaccumulation. And then we had liquidity that was created. Price came back down, right? Started to show that lethargic price action to the downside. We don't see a lot of displacement candles or anything that stands out to us, right? In the downside, when I talk about displacement, I talk about these thick candles, right? That break structure to the downside and say, yes, market's moving this way. It's very obvious to us, right? We can look at that and see that and understand what's happening within that price action. So price comes down, mitigates our zone of demand. We have that rally-based rally that we had. We showed that supply zone, again, that was created from that accumulation to the distribution. What happens if we play it out? That supply zone is then violated. So price now has the ability to come up into premium, right? We had a break of structure right here on the 4 hour. This area is an area of demand. This consolidation, right? On the daily time frame, I'm not doing any refinement right now because we're just worried about the behavior. Price then moves up, right? Mitigates our zone of demand, moves up into our zone of supply. We see all of these early shorts taken out, and we start to see these longs being formed. So now you can see, right, if we were uninformed within this trade, right, we got that accumulation to the distribution. We shorted right here because we thought it was going to continue to the downside. What happened, right? We had all of these previous shorts, so market needs to rebalance. We need to mitigate other zones of supply, right? If we wanted to continue down, put in a lower high from this move right here and continue to the downside, right? But remember, our weekly time frame is still bullish. So let's go to the weekly. Actually, let's go back to the daily to show where the shorts we're getting in. All right, so now we understand prices within our range. We see our liquidity that is being created within our range. A possible break of structure right to the downside on the daily. Remember, overall our weekly is still bullish, so we still have the chance to even come back down to these areas, mitigate this zone of demand, right, and continue to the upside from this overall bullish move out of the range. So we allow price to create liquidity up and down the range. We can see this is literally retail uninformed money, right? Going back and forth. That's what it is. There's a balance within the market, an equal amount of both shorts and longs, thinking that one, maybe this is reaccumulation, this is demand, right? They're longing this. They want to take this to the upside after this break of structure right here. Or two, they think they caught a top, mitigated supply, and they want to catch this trade to the downside. Now, as price comes into supply the first time, I start to see some volume that is being formed, right? And we get a possible break of structure to the downside right here. But remember, this overall move that broke this supply zone and broke this structure right here can still put in a higher low if we respect this low right here. So price comes up, creates these equal highs. So this is now early shorts getting in trades. I understand this as liquidity, so I would look for this area to get taken out, possibly mitigate some higher zones of supply within this range right here, and then look to target liquidity down within this area, possibly unmitigated demand or unmitigated demand within this whole range right here. So we understand that early shorts are getting in trades. Wait for price to play out. It takes out the early shorts, goes straight up for them, right? We again identified all of these lows right here as liquidity. So if I take this away, right, we have our buy side liquidity above and our sell side liquidity below. Price comes up, takes out those shorts. Now we can possibly look to take some type of trade to the downside. Remember, this is still counter trend within this point in time. So now that price takes out those shorts, mitigates that zone of supply, I'm expecting price to then move down right into this area of demand or take out this liquidity right here from this move, mitigate this institutional candle down here, right? I have a couple of plans, a couple of scenarios played out so that whatever happens, right, I'm prepared for it. Right, we see price take out those highs, mitigate that zone of supply, start to come down. We have areas of demand right here. Now, this is where it gets interesting. Price does not respect that area of demand, right? It respects this area of demand right here, this consolidation, but it doesn't come lower. We start to create lows again. This is showing me that a lot of early longs are getting in trades at this point. It seems to me at this point, right? We're taking highs, leaving lows. So I'm looking for a possible move to the downside. Remember, our weekly is still bearish, so we need to see a weekly move, break of structure to the downside to look to take this trade. Now, even on a daily chart, right, with all these break of structures to the downside and everything that is happening within this range, we can still see that liquidity and that range behavior that we are talking about. Now, price takes out these highs right here, starts to come up into supply within this area, right? As long as it respects this high that created a new low, then I'm looking for possible lower prices. But then again, remember this break of structure happened right here, so we could come down, take out this liquidity, and then move higher within the range. Price starts to come down, right? We start to see a volume impulse. No break of structure yet. Daily possible break of structure right here needs to be confirmed with a lower high for on the 4 hour. Here we go. All right, displacement candle to the downside. Area of supply within here. I would want a 4 hour break of structure to the downside to look for supply within this area to look to possibly take this trade to the downside, to areas of demand down here or areas of liquidity within this range. We see a large, right, move to the upside. Here comes the volume. Price comes up, mitigates these zones of imbalances right here, takes out early shorts right here, as well as all of these early shorts. So if I were to show you that right here, immediately raise liquidity, right? So it opens up liquidity within the market. Let's play a couple more candles. Price then comes back up, right? We get our break of structure to the downside right here. our area of supply is shown right here, and then we actually get our trade within this area, right? And we can look to take this trade to the downside, then targeting supply or demand within this area. But remember, this is, even though this is a 4-hour trend, right, this is still all internal to our overall narrative. Because on the weekly time frame, we are still bullish. So again, like I was saying, we could come down to these areas or even lower, and then still have the chance of moving to the upside and taking out all of these shorts that are being created. Price came all the way up into the supply zone, created more equal highs right here. So we understand that there are more shorts now getting within this trade, trying to catch a lower high, taking this to the downside even more. Right, so now price comes down. We see our lows that were being created. It takes out the lows. It's coming for these lows down here. Right, we take out these lows right here. And then again, after mitigation of that consolidation within this area, liquidity raid right here, we now get that move higher, right? Because on the weekly, our price action is still bullish. Price still moves up, right? And we can see higher prices forming within this range. On the weekly, I still need that solid break of structure to the downside after liquidity raid with volume and imbalance and displacement to show me that I want to possibly take this trade to the downside. But within all of this price action, we can understand that retail, the uninformed money, right, was getting very, very manipulated within this range, right? And overall, this is just a higher time frame Wyckoff schematic. So let's go back to the daily. Sorry, the weekly, because we're looking for that break of structure downside. But I showed you all of that analysis, right, within this range, how traders can get confused. But overall, we understand it's still bullish. So again, we're still looking for some type of displacement. Price then comes up for these highs right here. We get a large move right here, and then we get this move to the downside right here. This is that move that we wanted to look for, right? We can see that volume that was being formed. So let me go ahead and get rid of this demand real quick. As well as this, but we see that volume that was being formed. We get those break of structures to then the downside right here, right? We can identify areas of supply. Institutional candles, right? Our weekly institutional candle here. To look to possibly take this straight to the downside even more. We get that break of structure, but then we need to confirm it with a daily lower high.
A card certificate board scene.
So again, we start to see price move up. We're creating those let's go back just a little bit. But again, right, we're looking for accumulation to then distribution within this area. We see that accumulation that is formed. We see the early longs that are shown after that breakout, right? They're within this area, getting in longs, putting their stops underneath these lows. And they're looking to then take this to the downside. Now I've identified this area, right, as an area of supply. My weekly institutional candle. Price comes up into that area. We see that area of consolidation right here. Price break structure to the downside right here. Area of supply is shown right here. We can look to possibly take a trade right here, right? All of these lows are being formed, but then again, at this point in time, I'm actually looking for higher prices overall, right? Because I still want imbalances filled up here. I still want the supply mitigated up here. And I want displacement to be shown because this isn't showing me that at this point in time, right? I'm not getting any volume, any big candles, right? Big printed bearish candles to the downside after breaks of structures to show me what I want to see. Price then moves lower. Let's go to actually a 2-day to understand this. So we know, right, that we had an area of demand that was down here. If we still respect this load, then we have the possibility of putting in a higher high within this range right here. So price then comes back up, right? We see these highs that are being formed right here, and this is where I start to get interested. Because equal highs are being formed, my volume is start to being shown. Now I'm looking for something more solid, right? I'm still looking for that daily break of structure to the downside within this point in time. Price moves up out of this range, right? Mitigates those institutional candles and actually rates liquidity to the upside right here. So we understand that we put in a high low right here, broke structure to the upside right here, respected the consolidation, the demand within this area, and then we're able to move to the upside from that. Price was not fully bearish, right? Because we needed to then, remember, confirm our weekly lower high with a daily right break of structure to the downside. Did we get that displacement or anything like that within this area? No, we did not, right? I didn't get any volume on any breaks of structures to the downside, right? All of these shorts you can see were being formed. So once price broke structure to the upside once right here, respected this demand, it was able to then take out all of these shorts right here, move to the upside, put in this higher low right here, and then raid liquidity to the upside. So let's get rid of this. Now let's understand the right side. So now at this point in time, right, looking for that displacement, volume is formed, and then I get a break of structure to the downside. I have a daily institutional candle that is put in. This is where I'm most interested. Let's go to the weekly at this point. And now this is how the weekly looks to me, right? I'm getting displacement, break of structure to the downside, and look at all of this consolidation right here. So what this actually does, right, is create enough liquidity within the market so that one move, right, this one candle that is being formed within this move right here is now breaking structure on multiple time frames. So if it was the daily time frame, this one move right here, right, this 3-day move now gives you all of that ability, right, to break structure to the downside because of all of this liquidity created. So now we only had one move up, right, and then 2-3 moves to the downside immediately after that. So now we can look for areas of supply to look to possibly take this trade, right? We understand that our institutional candle is formed right here. Actually, this is much, much further, but at this point in time, right, these highs are taken out right here. We start to see that volume that is being formed. Lows are being formed right here as well. Let's play out a little. And then there it is right there, right? So at this point in time, I get the volume, move up, move down, bearish candles are being formed. Right, it's starting to look very volatile, but remember we have our objective. We need to see a weekly break of structure to the downside, then we can wait for the daily. Now remember, price came all the way up into this area, so if we do our premium and discount for our previous move, we have our supply that was formed, right? Our accumulation to distribution, displacement candles that were shown right here, right? Our volume that was being shown right here, break of structure to the downside, area of unmitigated supply. If you do the entire consolidation, right, this is your supply zone. But if you wanted to refine that to then institutional candles within this range, the last buy before sell candle is this candle right here, right? So we now have this institutional candle that was formed. We look for price to respect that, break structure to the downside, and then I can refine to a daily and then the 4-hour down. So we let this play. We then get our weekly break of structure to the downside. Right? You can see our volume impulse that was created right here. So we could look at this as an area of supply, but we understand that we do have a lot of highs that are being formed right here. And if I'm looking on the daily chart, right, we saw our weekly chart and we saw these candles that were formed right here. We could possibly look at this, right, as an area of supply on the weekly. But if I were to refine this one area on the daily, right, I now have that that show of hand, right, that displacement candle to the downside right here, impulsive move right here. Not too much volume on this move, right, but I want to monitor this area for a daily break of structure to the downside to then confirm my weekly lower high, to look to possibly take this trade. So let this play out. Price comes into that area, taps into that area, right, and then we see this move down. Daily break of structure to the downside within this point. So we are far. Looking for something more. We understood these highs are up right here. We have highs within this range right here. Not super price hasn't shown me that displacement yet, right? Price hasn't shown me that move to the downside yet that I wanted. So I'm still expecting price to respect this low, move higher into the range, or if we can create supply showing some type of displacement to the downside, right, then I can look to possibly take my trade at that point in time. Now, as price starts to break structure to the downside over here, price is creating, again, no volume within this move right here. So we can expect price to move higher within the range, right, if we see those breaks of structures. Now, this is where we start to get that volume, right, that volume that was introduced. At this point in time, so we have our weekly institutional candle, right, our weekly area of supply. Price comes up into that area of supply. And then on the weekly, this is what I was looking for. That displacement to the downside broke structure right here, right? This large candle brought displacement. Here's your volume as well. Look at your volume increase on your break of structure to the downside from this low, right? This consolidation area of demand reaccumulation that was violated on a displacement to the downside. You get your volume, right? And now I can look for that daily structure to now play this trade. Also, again, another area where you can get confused, because you might see this right here, right, as your break of structure to the downside, and you identify this area of consolidation as an area of supply. Right, and you're looking for a lower low to be formed. But then again, right, we have all of these highs that are being formed right here. We can look for a price to come up and take those highs if nothing is shown, right, within this move right here. Actually, let me bring this back a couple bars. Right, so if I'm looking at closures, I get that daily break of structure to the downside. I need to confirm it with a 4-hour lower high once coming into this area. Price comes into this area, we break structure on the 4-hour right here. It's starting to show that displacement, right? So I'm identifying institutional candles on the 4-hour as well as some type of supply. Now again, this move right here is starting to show that volume, that same thing we were looking for before. See this on this candle right here. You have institutional candles that are being formed. We need to then confirm this, right, with an hourly lower high after coming into this area. So I need the hourly to now show me that same exact behavior. Price break structure to the upside on the hourly. We come up into our institutional candle, starting to create those highs again. Nothing is showing me that this placement, right? If we're looking down here, we're not seeing any volume that is being formed. Now this is where I'm interested. Why? Because we get a break of structure to the downside on the 4 hour right here, right? We get that volume that is being shown right here. Then let's go to the hourly. Right, and then if we're looking for now our areas of supply to now take this trade, right? Because we got this break of structure to the downside right here, we're looking for another break of structure to the downside or areas of supply within here. Now I have an institutional candle that was formed right here. Area of supply. We can see early shorts taken out. Again, another break of structure to the downside, so supply could be created within this area. Price comes up. Again, I need to see that volume. We get that break of structure to the downside right here. A clean now institutional candle is formed right here, right? We now have our hourly from our 4 hour to our 1 hour in sync. Once price breaks right here, right? And then I'm looking for areas right here. So let me tell you where this trade was actually taken. So from this daily, right, move to the downside. We were looking for the 4 hour move to the downside following. We got a 4 hour move to the downside right here. So I was looking for price to respect this high. If we closed over this high, or showed some type of impulsive move to the upside, right, with volume over this high, then I would look for areas of demand over here to then take this trade. So let me get rid of this. We understand this area as an entire area of supply. Price comes up into that. We start to take out all of these highs to start to form new supply, right? So all of this action that you see coming to the upside, rating liquidity to the upside, is opening up liquidity in the market for algorithms and institutions to then get in their trades, enter their trades, and then take this trade to then the downside. So if we're looking on the 4 hour, if we do the candle before the candle that breaks structure, right, our supply zone that was formed right here, we understand that this candle is our institutional candle, or sorry, our area of supply right here. If we look for the institutional candle, we can mark out this entire candle, right, as an area of supply. So we have this distribution that is formed, and then from that distribution, we break structure to the downside right here. So we understand one, supply was formed within this area as well as this area. So if we do the consolidation, so remember, this is a 4 hour institutional candle. Now we're on the hourly, right? We can see the hourly supply that is being formed as well. The highs that are created, price comes up into that area. And then this is where I was most interested in my trade. I actually took an aggressive entry right here, but I will show you how this worked out. So price comes up into this area at this point in time, right? I have the daily and the 4 hour structure break at this point in time. So I'm going to take an aggressive entry if I get a 15-minute break of structure with supply that is being formed on the lower time frames to then the 1 minute to look to possibly take this trade to then the downside. But now that we have hourly confirmation, right, we have areas of supply, clean areas of supply that are being formed to look to possibly enter new positions to continue to take this trade to the downside, right? So let's go right here. Now, if we do some refinement of this zone right here, if we're looking to short, right, we understand that we have our supply zone that was formed within here. So now if I want to do some refinement within this supply zone, looking at this, right, what candles or areas of imbalance have been formed, right, or have been left unmitigated within this move right here. So let's just take a look real quick, right? This seems to be taken care of right here. Price moves down. This seems to be taken care of right here. We have a displacement right here. Price came back up. It filled that imbalance that was formed right here on this move to the downside. And then we move down again. Now we have an imbalance that was formed right here. as well as an institutional candle. Now, why do I call this an institutional candle? Because remember, on lower time frames, this move to the downside is going to be an accumulation to distribution. So supply will be created within this area. If I go to the lower time frames, it's exactly what we were talking about, that accumulation, right? Manipulation of lows, liquidity rate to the downside, move to the upside. We thought demand was created within this area, right? But all it did was raise liquidity to the upside, fill areas of imbalance, and then distribute then to the downside. So within this area, I noticed this candle, right? This institutional candle, imbalance. So we have our imbalance that was formed, institutional candle, break of structure to the downside. Let's do this as our institutional candle. This is where I looked for sells, right? No limits at this zone, but at this point in time, this is what I was most interested in because this was the cleanest candle that was formed to me. Yes, I would want prices overall higher within this range, right? But at this point in time, this is the cleanest thing that has been shown to me based off of structure and behavior, right? It's not always going to be at the very top, at the very bottom, always long the 0.5, always short the 0.5, whatever it is, right? I don't have a set, yes, I'm always doing this. It's going to be based on the behavior that is being shown. Go ahead and check these mentions real quick. My bad, y'all. Yes, I will explain how do I identify an institutional candle here in 1 second. But actually, let's do this real quick. So institutional candles are candles that are following a liquidity rate that I always look for. So they're always going to be, to me, the last buy before sell candle. And then the last sell before buy candle. So the last buy before sell candle is going to be that last move to the upside. That last candle move to the upside before a bearish engulfing to then the downside. It's going to be a bear engulfing following. So what an institutional candle is and why it's called an institutional candle is because it is quite literally the where institutions are entering. So what this means is institutions push price up out of the range, right, to open up liquidity within the market, and then they enter. So they enter and then immediately push price down. We show that bearish engulfing, right? And then we see that following move from that. So it's basically the fake out, right? The fake out to the upside or the fake out to the downside, the shakeout, whatever it is. That's where algorithms and institutions enter the market, right? Because that's where everybody thought it was going to go the other way. They thought it was going to go the upside. But all they did was just push up, open liquidity, and then immediately break structure to the downside following. So for bearish scenarios, it's going to be the last buy before sell candle, and for bullish candles, it will be the last sell before buy candle. Some call these order blocks, right? I just identify them as areas where banks or institutions got into trades, right? So we see these at extremes of ranges usually, and we can see price come back into these areas and mitigate those areas, right, to fill in those banks' last orders before continuing. So this institutional candle right here, that on lower time frames that we identified, we were talking about earlier. These highs that were formed, price liquidated those highs, and then we got that immediate bearish engulfing to the downside. If I'm looking on the 15-minute, because that's where it was pulled from, right? We got that move to the upside. These highs that were formed right here, liquidity rate to the upside, and then break of structure to the downside following. We have our imbalance as well as our displacement formed. All right, so now I'm looking at this area as possible buys or sells. Price comes into our area, and this is where I'm most interested in my trade. Let me go to the lower time frames. Actually, take this back one candle. So at this point in time, 15-minute structure breaks to the downside. I'm looking at wicks when I'm on the 15-minute or lower. Usually on the hourly, we'll usually see a close on a break of structure to the upside just based off of experience that I've noticed, right? But most of the time, I will be looking on the lower time frames, or actually all the time, sorry, on the lower time frames for wick breaks, right? That's going to show me my structure break. So at this point in time, I get a structure break and I get a candle before that candle, right? Institutional candle that was formed, consolidation before this breakdown right here, as well as the candle before the displacement candle that broke structure to the downside. So one, I could identify this area as an area of supply, just this singular candle right here. Or two, we can mark the whole zone, right? That whole consolidation zone, possibly try to get the institutional candle within that. Right, to then look to take this trade to the downside. Price moves up into that zone, right? Into that zone of supply right here. So we would have been tapped in our trade right here, or we can wait for a 5-minute break of structure to the downside following displacement with volume to then take this trade to the downside. So we'll go to that point in time. Price break structure to the downside. Displacement is formed. Institutional candle plus supply is formed right here. Alright, so at this point in time, I now have a 5-minute break of structure to the downside right here. Institutional candle that was formed. I'm looking for the 4, 3, 2, 1 at this point in time. We go to the 1 minute. Again, we're just looking for behavior. So we need to see that volume as well as that displacement to the downside. So one, we could have a possible trade right here, right, with stops over these highs. Short position here, right, stops over these highs that cause new lows. And then looking for an overall bias. As far as take profits go, I'm going to be looking to take profits to these lows right here that were formed. And when I start off taking profits, right, for a conservative take profit, we can target areas of demand right here, areas of demand right here that was formed within this one move right here. So then if we didn't catch the lower high right here, right, price comes down, mitigates this demand, and then moves higher into supply overall. Because remember, I did want higher into this supply, but this was the cleanest institutional candle that we found. So based off of this given data, this is where I'm going to look to take my trade. So we now let price play out. We see price start to show in bearish candles, right? Bearish candles to the downside. Volume is starting to be formed. I'm looking for these highs to get taken out, right? Or sorry, these lows to get taken out for that continuation to show me what I want. Price comes up, takes out these highs right here, and then we start to see, right, lows being formed. So early longs are getting in trades right here. They think this is going to continue to the upside. Maybe they thought this was reaccumulation, right? They saw all these highs right here, which is perfectly fine. This is where it got really, really manipulative, right? As long as price respects this high right here and this high right here, then we can see lower prices. Price ends up doing so, right? Then we see another move back up into this institutional candle right here. More displacement is being formed. And then this is where I'm looking to now get into my minute trade. Why? Because my minute structure turned bullish right here, right? I get a break of structure to the upside right here. Demand that's being formed right here, and then I move higher into the range. Takes out this liquidity right here, and then we get a break of structure to the downside right here. Institutional candle that was formed right here. Area of supply that was formed right here if I'm on the lower time frames. We see all of this imbalance that was formed right here within this trade. So we can look for a 1 minute imbalance to look to possibly take this trade, or a zone right here, right? A institutional candle. right? So I'm looking at a general area versus a certain price target. Lower into the range, and then at this point in time, based off of this displacement that is being formed, if a new low is being formed, price should then move lower, because now we have taken liquidity as well as broken structure, right? We have a 5 minute to now 1 minute break of structure to the downside. I'm expecting price to move at this point in time. Price comes into that institutional candle that we talked about, right? And then this is where we see that final move. Exactly what we were talking about, right? We saw lows over here, areas of demand over here. We would have taken our first take profits over here, and then targeting lower within the range. Now, if we're on the daily, I see this break of structure down here, right? So I'm expecting price to actually come lower into this entire area of demand that was formed from this impulsive move to the upside right here. Or price could take out these lows right here, mitigate unmitigated areas of lower time frame demand within here, and then move to the upside from this break of structure right here and this impulsive move. But it may be boring, right? But we see all of this analysis that we had to do to get to that point in time to where I can wait for the 1 minute break of structure to the downside and know that that 1 minute break of structure to the downside should bring that move, right? Because of all of that previous analysis that we did. And then from that, we get the final move and we are paid. So that was just a little GBP NZD analysis, right? A very, very volatile pair. Some call this exotic, right? These pairs that we see all these wicks up and down, they are very hard to trade, right? But we can see that with structure and with objectives and understanding that it's there to manipulate you, these candles are there, they're shown to manipulate you, right? Knowing that price has objectives and knowing that it goes to fill orders and knowing that it needs to do this, right? It needs to do this, cause and effect, right? Knowing that one needs to happen before the other can give us that confirmation as far as entering any sort of trades. But that was a little bit of GBP NZD. I'm probably going to go over XAU on our next stream. Let's do a little bit of Bitcoin and ETH analysis because that took up actually a lot of time. But let's get into this real quick and then I will go ahead and end it. If anyone has any questions, go ahead and ask me that now. I'm going to be looking through chat as well real quick. Okay, we got Maxi talking about internal, externals, internal, external trends, and then institutional candles as well. We went over institutional candles, internal, external trends. I can go over real quick as we're going over Bitcoin, just to show you something real quick. Let's go to the daily chart. Understand our structure. We have a high, a low, a high, another low that was put in if we're looking at closures, right? So I'm not even looking at wicks, right, at this point in time. To make this easier, you can literally look at it like this, right? Structure is still bearish. We have this high that put in a low right here. This low that put in a new high within this range right here. But remember, as long as we respect this 22.8 high right here, then we have the possibility of seeing lower prices overall. So to draw out my range from the extreme high to the extreme low, looking at something like this, remember we had, okay, so at this point in time, right, this is our external structure. So our external structure is bearish. That is what I just showed. Now our internal structure showed a break of structure to the upside right here with demand creation within this area. So we saw a liquidity rate to the downside. This supply that was formed from an accumulation to distribution was immediately violated. We saw a break of structure to the upside. These lows that were formed as well as demand that was made within this area right here. So if I draw the consolidation, we understand this entire area, right, as an area of demand. So if price respects this, continues to make higher lows and break structure to the upside with imbalance and volume, then I would look to take trades to the upside higher within the range. Why? Because I have an area of unmitigated supply within this candle right here. Why? From this institutional candle, liquidity rate to the upside following break of structure to the downside right here. So this is our strong high that has been put in. Price came here, formed liquidity. So we now have a lot of early shorts that are getting in trades. So I could expect one, price to possibly come up into this area of supply from basic structure right here, mitigate that supply, come down lower, right? Get all of those early longs out of their trades, as well as all of the early shorts. Shorts get back into trades, right? We come back deeper into demand. So we come back deeper into demand, take out these lows, break structure to the upside, show the demand right here, and then we can look to take the trade to the upside from that point in time. Or price break structure to the downside right here. From this liquidity rate respects this high that created a new low, and then we see lower prices overall. But I'm wanting price to then generate liquidity as we are coming down. And then we get that impulsive move, that break of structure to the upside and creation of demand, and then I can look to take that trade from that point in time. But as long as we're hugging discount of this range for Bitcoin, then I am looking at more cumulative behavior as far as upside. I do believe we need to put in a lower high overall, and on the weekly chart, right? From this weekly breakdown of this range right here, right? Price broke down right here. We had an area of supply, clean area, drop, base drop that was formed. So we could, one, see price come back up here, create a lower high, continue to the downside, or create some structure, break structure to the upside right here, and then continue up. That's why I'm looking for more long bias overall anyways, because I understand that even if price were to go lower and mitigate these areas, right, we still need to fill orders. We still need to grab supply as well as create supply to be able to move to the downside. So one, we could create supply by creating a redistribution, right, taking shorts to the upside and then creating supply, breaking structure to the downside. Or two, we mitigate this supply and liquidate early shorts, and then we can move to the downside from that point in time. So I look at it from both ways, even though overall is bearish, and yes, I would like to short this, right? I understand that price still needs to create a lower high in a bearish trend, and it still needs to create a higher low in a bullish trend. That's what I'm looking at for Bitcoin. If we're looking at ETH, it's going to be very, very similar. We have supply that was created within this area. I have early shorts right here, as well as equal highs that were created at the top of the range. So we can see all the early shorts that are being formed as price is coming down, creating more shorts, starting to take out longs. I'm looking for that final, right, those early longs to be taken out before we get the entire expansion out of this range. I have supply that I'm looking to possibly be respected within this area. We have institutional candles right here. One, we could raid liquidity within this area and then move to the downside, or respect the supply and move to the downside. I'm just looking for the behavior, right? So knowing a general area is what helps a lot when looking to take my trades. So like I said, right, with FOMC tomorrow, I'm not looking for many trades right now, many setups right now. I still believe price is generating liquidity. It's kind of a no man's land for myself personally as far as any plays go. Scalping, yes, this is a scalper's market right now within this range, right, up and down. Looking for certain structure, just remember your higher time frame bias overall. Is there any questions or anything like that before I go ahead and wrap this up here? We'll get into a detailed gold breakdown in our next next stream on Thursday. But for now, this is all I'm going to have for you guys. So go ahead and ask any questions right now, or forever hold your peace. Yes, Jerry, I'm looking for a return to supply, right, that caused that breakdown to put any lower high overall. So we understand, right, our higher time frame. Just kidding. We understand our higher time frame bias, right, as well as our lower time frame bias. So on our higher time frame bias, if price just made a new low, we always expect that pullback, right? So on the higher time frames, right, we just made a new low on the weekly, so I'm expecting a weekly pullback. If our daily breaks structure to the upside, that's going to put in my weekly higher low, or sorry, lower low within that point in time for a counter trend long, right, to take that trade to the upside. But remember, with this range that we have put in, right, a lot of profitability opportunity is being formed. So I am looking for higher prices overall. But yeah, I appreciate you guys popping out today. This stream was recorded. It will be posted on YouTube once it is done rendering, hopefully by the morning. I appreciate everyone coming out. Any questions or anything like that, feel free to DM me, drop it in chat. Let me know what you guys are thinking. Feel free to drop some charts, anything like that. I appreciate, again, everyone coming out, and you guys have a great night.
Thanks, man.
Of course. Still composite operator.
Composite man sees you
Composite
lurking.
man. Composite man. Alright, boys, y'all have a good one.
Lick me if you can. Composite man, lick me if you can.